Hello and welcome to today's market update, today being November the 1st, 2010. Volume today was light on the NYSE. In fact, it was lighter than Friday's volume. I did not do a recording on Friday just because it was almost a non-event day. It really didn't tell us anything more than what we had known on prior days. Today's action was a little curious. It was light on volume, however, it did try to test this new high here, as you can see. And it ended with some weakness here. Alrighty. This does change a little bit. What we're looking for now is, in the S&P, a break below 1171 to signal somewhat of a downturn. However, given this market, it's not unlikely to see this thing move to about 1210 and then possibly reverse down. Some of the big events that we're looking for this week, of course, is a QE2 announcement that's coming this Wednesday, and of course the election, which is occurring tomorrow. So really the thing that we want to look for this week, there's just going to be a lot of volatility in the markets. You're probably going to want to really tighten up your stops if you haven't already, and really limit your new purchases. Technical analysis and looking at the markets is kind of like driving in the fog. Right? You can only see so far out, and it's a little foolish to make long-term decisions, especially in during times like this. Let me take you to the 10-minute S&P chart real quick, and I want to show you kind of what I'm looking at in terms of if this market reverses. We want to find clues that'll let us know possibly when this thing might reverse and what that looks like, and I'll share that with you now. This was a recent high today, and then we see, it sold off, and it ended here, and then it popped up again towards the end of the day. Now, typically, what we want to see in a true reversal, or a trade that I often like, is, establish a peak here, trough, and then this peak, second peak here, will retrace between 62% and roughly 75%, which I've drawn in this box here. If prices hold in this area, then we could see a longer sell-off, right? Which, curiously, let me go and flip it over to a 2-hour chart. Will take us to some of the levels that we were talking about previously, and that namely is the 1171 level here. So a wave all the way down will take us to this level here, which was our initial support that we talked about on Thursday, and it'll also take us all the way down to this support here, which was this prior low. All right, and that would be a 1.61 extension of that smaller wave that we were looking at. From here, if prices do not hold, then we can, see a revisit of some of these prior lows in late September, early October. So keep an eye out. It's definitely an interesting time. Let's go and look at the Russell. Now with the Russell, I went ahead and drew some gold fan lines, and gold fan lines are a pretty interesting tool, and I use them fairly frequently, especially if I can't determine a really good trend line. I'll use these fan lines, or gold lines as they're also known, and essentially what they are is they'll take the retracement level from this low to this high, and it'll draw a line from here right to this point here, to the top point here. Right? So this is a 23.6 line, a 38.2 line, 50, and a 61.8 line. All of these are all Fibonacci retracement levels. Typically what you'll find is prices will trade along several of these lines. So, and if it falls, right, like we found support here, it'll fall to the next line, and then it'll try to work itself up. If it can't work itself up, then it'll also trade down to this line, and so forth and so on. And you'll find this often will correlate with a lot of zigzag type corrections. I've also included the MACD. Again, we're using a 1664, and we see a crossover had just occurred over the last few days. So this is also another area that we want to keep an eye on. the small caps are showing a lot of weakness. And like we said before, this market's more than likely due for a correction. If it does correct, that's when we want to start looking at some potential other long positions. The Dow, I went ahead and created a chart that uses some different tools. Now, a lot of charting software will use Fibonacci circles. Unfortunately, a lot of users don't use them very correctly. So what I've done is I've just created a circle here, right? And typically you can find support and resistance. You'll see a lot of circles, especially when you see rounding correcting patterns, right? So this is a rounding correction pattern here, and you can see all the closes are within this arc, right? Here, 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 and here. Now, should prices move up, let's say we get a bit of a surge up, probably looking at this level here, where this might be a termination point of this particular trend, right, of this particular move. Otherwise, prices could trade within this channel, right? They might break here, and then break down again, and then trade within this channel here, break, and then trade within this channel here. And you'll see this often. Oftentimes you'll find support, right, along this 45-degree angle, and also this lower trend line as well. The circles also work very well if you're using the gold lines like we had just looked at with the Russell. Moving to silver, silver is a really interesting trade, and this is something that I've really contemplated quite a bit here lately. If we see more money moving into the precious metals, and God forbid that the precious metals should experience some form of mania, essentially what's going to happen is we're moving liquid assets, being cash, into illiquid assets, being precious metals. And the more of conversion we have from liquid assets to illiquid assets means that there's less and less money to participate in driving stocks further. Now, of course, we're really going to have to see a lot of money moving into the precious metals. I'm not sure if it's there yet. There was a recent survey of fairly wealthy individuals who are holding physical gold and silver at record levels. So that's something that you really want to take a look at. The chart here I have is silver on a weekly chart. And again, just like some of the other issues, I went into a channel here. And you look back here, this is March highs. And you can see that recent price actions have just blew right through it. So where does silver go? My suspicion is, and again, kind of driving down a foggy road, is this move right here moved a little too fast too soon. I wouldn't be surprised if we see silver trade flat for a short time, right? Probably an up and down zigzag pattern, and then continue its higher high. Bets are kind of off right now as far as where we think silver is going to go. It could trade up to this higher trend line here and then terminate. If it does, we're looking at prices north of $30. So that's another one we want to keep an eye on. Here's the daily chart. Last Thursday, I talked about the upper resistance and lower support lines being here. And here's Thursday's move. And they moved above this upper resistance line. And then today, sold right below it. Typically with moves like this, for a purist, this looks like a cup and potential handle pattern. If it is a cup and handle pattern, this will retrace 50% roughly of this move from here to here, and then it'll make a new high. Keep an eye on this. If it does hold in this area here, there may be another opportunity to go long this particular, to go long silver. Now, if you wanted to, my favorite strategy is to take this breakout here and basically draw a trend line straight across. You will purchase silver once it breaks this top trend line plus, say, 10 cents or so. Moving on to gold, Gold's a little interesting. Gold did not or has not confirmed silver's recent price movement, but we do see that gold closed this gap here with recent prices today. If we look at the long-term trend line, prices may return back to this trend line and then move back up again. If that's the case, you're going to want to figure out where your entry points would be, and using something like this may not be a bad start. Right? If you do trade this market, of course, like always, make sure you know where your stops are before you actually place a trade. In this case, your stop would be slightly below this recent price action here. Let's go back to this right here. This is an Elliott wave oscillator. This oscillator was made popular by Tom Joseph, excuse me. And what it does is it basically measures momentum. It's a moving average histogram essentially. And what you want to see is a pullback, right, close to the zero line and slightly below it, which would finish a wave 4, and then you can see prices moving up. There's a lot of folks who are calling for a reversal in gold. Right now, the Elliott wave oscillator does not confirm that. In fact, if anything, it's saying that there's a potential for it to make a higher high. So we'll keep our eyes on gold as well. Well, that's it for today. Again, if you like the video, feel free to give me a thumbs up or subscribe. And if you have any questions for me, feel free to leave me a comment. Again, if you have any stocks or issues that you want me to take a look at, I'd be happy to do that for you and possibly post them on future videos. Take care and have a good one. It's kind of weird.